Hello, traders. This is my weekend update, and we do have some warning signs that the Bears might be taking some control this week. Um, we'll see what happens. I think it's too soon to call for a significant correction in these markets. I do think if we were to get a pullback, I think the level 210.24 here on the Qs would be a logical place for a back test. We sort of blew right through that resistance level that I had drawn on my charts, and a back test of that would be nice. We did get a doji for last week, suggesting that's a weekly topping candle, uh, and we seem to be moving out of this the fib fan uptrend the way I've got it drawn. And notice how we closed right on that fan line, so potentially giving us a sell signal in the Qs. Okay, and I had called out in my prior videos, 2 videos ago, a potential topping uh, resistance level here on the Qs, and I called it out for last Tuesday, or let's see here, Thursday. So I happened Friday. Yeah, okay. I think I did the video Wednesday, so I was a day off or something like that, and it came up here right above my resistance line, and it only stayed up there for about 45 minutes. No. Oh, well, no, about 2 hours. About 2 hours, it stayed up here above the resistance line, which I had told about everybody in the room and my followers. And this all happened Friday. I'm sorry, this had happened this past Friday. We looked above and we found resistance on the Qs, on that resistance line, which I had mentioned earlier this week. That's right. And found strong responsive selling yesterday. That's the first strong selling we've had since the 1st of December. I mean, it was really pretty impressive, the selling that we saw in the markets. Now, on the grand scheme, if I come out here and use my market webs, I used version 2. And basically, what I'm seeing here, you see how this is still somewhat compressed. This can be a blow off top situation in this market, and especially considering how much of a gains we've had versus what we had 4 or 5 months ago in these markets. Look at Apple and look at some of these stocks; they've just went completely crazy. It seemed like, but our point is, if we get past this resistance level in the Qs, see how the resistance levels dramatically expand out. This here to me is a true blow off top situation uh, in the technology sector, in my opinion. And we had this during the tech bubble, a situation like this. So you always have to keep this in mind. We had a really bad Friday, but we're right on the cusp of potentially a massive uh, uptick in these markets for a blow off top to the upside. So this is something you've really got to be aware of, and that's what these markets have been pushing for, is for this situation here. So I'm not saying it's going to happen, but it's something to be aware of. Now the SPY is not nearly as clear. I mean, you have a lot more chop on the resistance levels here, so it's not nearly as clear to the upside, in my opinion. The Qs are the ones that I'm really concerned about. They are really trying to push those Qs up into that nosebleed area, and even Friday after everything, they did not want to give up much of anything on the technology side. So keep that in mind that we might be entering that nosebleed blow off top phase. Although I do think a lot of risk this week that we're going to see continued selling pressure in the markets. So I just wanted to let you know about that. And we did, was it SPY? We do our market maker moves. I think it was SPY. I haven't watched any other videos, so I haven't been able to keep up. SPY managed to regain the market maker move low for the week, in my opinion, based on the I use the custom settings. I didn't actually manually draw these from last week. That could be a little bit off. When you do use the auto settings with the the market maker move study, they may not always be correct. So, but that they did manage to close on the automated settings, and so just keep that in mind if you're using that study. Quick rundown on the sectors. We saw last week a breakaway. Okay, here's where our market maker move low. We had a breakaway close on our financials last week, so keep that in mind. That is our and no. Let's see here. See if I can get my information to pull up. No, it's not one to pull up. 1 second. Okay, that was on the financials. That's our 50 SMA, simple moving average on our financials. We did manage to close a little bit below that, all in one day. So that is quite something to be concerned about, breaking below the 50 SMA on volume on the first day of the sell-off. So that's something to keep on watch here on our financials. Also, we broke the 50 SMA on our retail, XRT, retail stocks. So keep that in mind, and we are outside of our market maker move on that. So that's another one to be concerned about. Our telecommunications holding out well. We do have Apple reporting this week, and they got Facebook and Google and stuff. But even that sector managed to close below our market maker move there Friday, outside the ranges. It was a pretty nasty week and all. Pretty much all week long, the energy sector, they went Tuesday. They immediately broke below the market maker move for the week and just continued to drift lower for the week. Very bad bearish signals out of our energy sector. Yeah, similar situation for our material sector. Managed to holding the bottom here so far. This is our defensive sector, our consumer staples. We managed to hold inside of our market maker move for the week for consumer staples, and that's typically what you'd expect to see in a market correction. We are breaking out to the upside on our energy or utilities. This is a very defensive sector, and we are breaking out, making new highs on strong bullish volume here in our utilities, suggesting a sell-off imminent in the markets. The industrials were saved by Boeing Friday, and that's pretty much all that saved them, in my opinion. They were down at the lows, then the news broke on Boeing, and it managed to come back in and save the low of the market maker move. And but it was looking pretty sad up until the point where Boeing news hit the wire there Friday. XLK, this is your technology sector on your spiders. Holding out really well going into this the earnings this week. That's just blowing off some extra steam with the markets. This is another speculative area in the markets, and that's your healthcare. And they really took a hit. They came all the way down to the year open on our healthcare. And that is a massive move here to be giving up all pretty much the entire year's gain all in one day. I mean, we went from the highs of the range all the way back down to the open of the year. So that is a very impressive sell signal for the healthcare. Consumer discretionary, we gave up all of our gains for the year, and we went negative on the year for consumer discretionary. So keep that in mind, that happening. And we broke below our market maker move for the week. So that's another thing to worry about. And then finally, what was holding out pretty good was our semiconductors. We did have a sell, even though despite very good numbers out of Intel. We did get a sell-off with the rest of the markets back into range there Friday, and we were still we were trying to break out to the upside, and we're still at the upper end of last week's market maker move, continuing to mark higher highs with the market maker move going into this week. but that was pretty strong volume there Friday for it to come back in. So, but the technology does seem to be holding up a lot better than the other sectors. Okay, going into this week, this is my worrisome situation here. The highest volume to do business this month is right at the bottom of the range for the XLK on my market webs profile, volume profile. What you generally want to do is see volume migrate to the upside along with price. We have a divergence, which I have mentioned in prior videos, in our technology. So despite the fact that the technology seems to be lagging to the downside, it to me represents the most riskiest area in the markets going into this week. So this is something that I wanted to point out is a problem. And if you look at the XLK, the top holdings, we got Apple, Microsoft, Visa. I think let's see, yeah, all three of these report this week. Intel already reported, okay, and I'm not for sure about Mastercard, but the three top holdings are reporting in this index this week. So just keep that in mind going forward, thinking about this, okay? And so we have a divergence going into these numbers with some potential breakage situation happening in the SPY. So, and some worrisome things happening here that might be unwinding in this bullish run up in these markets. So just keep that in mind. If we were going into these reports this week with that volume at the highs, I'd be thinking that we were going to be breaking into that atmospheric territory for the markets. Well, that is the opposite of what we've got going on here in our XLK, in my opinion. So just keep that in mind that I think we're reaching into the earnings and they're going to sell the earnings. That is my primary thesis. If I was a betting person, I'd give it a 70-30 odds that we're going to sell on most of these earnings this week because they're not going to be able to completely, totally blow out expectations after such a major run up this quarter. That it's just going to be, the expectations are just completely unattainable this quarter. So just keep that in mind. I do expect to have a record quarter. I just don't think I think expectations are going to be ratcheted down, and especially guidance. I don't think the guidance is going to come in nearly as robust as what the markets seem to be pricing in right now. Okay, that's all I've got to pretty much say. I gave you an idea of some of the things that are breaking down as of Friday, and am I a perma bear going into this week? Not necessarily, but I do think that if you just look at this technology chart alone, you have to be very cautious pushing your longs into some of these high flyers this week. And AMD's really been a high flyer too in the semiconductor area. And just look at this since last earnings. You went from 20. You've virtually doubled in price going into these numbers, and yes, I expect their numbers to be good, but are they good enough to justify a doubling in price? I don't know. I mean, so just keep that in mind and keep them. See how it's spent. This would be the one you'd have to really think about. See how the resistance levels now start spreading out. So AMD is the one that can actually go to atmospheric territory if the markets decide to rally big time. So just keep that in mind. What's going on here with AMD, and that is the number one stock, in my opinion, that has chances to take off to the moon. And Microsoft would be a second one that I'd be looking at here. And let's see here. I didn't have it drawn out yet. See, it's not even to my primary resistance yet. So yeah, I wouldn't even want to consider Microsoft as a blow-off candidate because it's still got near-term resistance, in my opinion. So it hasn't even crossed past that area yet. But I'm not bearish on Microsoft by no means. And Intel's already hit my resistance area, but definitely we are moving into a more blow off stage uh, if we continue to see a bullish rally, a tone in this market. So keep it in mind, they've pushed it all the way up to the area to where we can really get the big moves after these earnings. So that's the big worry you have here is our buyers going to step up and really start pushing prices to the moon. So be really careful here. I'm more leaning to the downside because of just knowing where we've come from. Instead of building out for a big breakout, we've already went up, um, unprecedented uh, increase the past 4 months into this area. So I'd much rather build out at this level and for the big move next quarter instead of trying to push it this quarter, in my opinion. Okay, please leave comments at the bottom and like it if you like it. And, I will see you guys in the chat rooms and hopefully we all can make money this week. Thanks a lot.